The Indian index has erased all gains since the start of 2024. But don't be fooled. The index is still up 187% since the 2020 low, easily eclipsing not only the US S&P 500, but also the European DAX. In fact, there are jewels of unprecedented size in this still largely neglected investment country, and the Nifty 50 index represents a great opportunity for diversification in the current uncertain environment. Moreover, with a current discount of 13% from the peak, this country is quietly becoming one of the hottest stock markets on the planet. While Western economies are now slowing down, India's growth is not stopping, and investors around the world are starting to turn their attention to it. Where others see chaos, some see opportunity. This is a growth story that is just beginning, and perhaps an opportunity that will not be repeated. Indian stocks will recover in 2025. Growth is expected to recover, and valuations are expected to rise to the most attractive levels since the COVID-19 pandemic, Morgan Stanley said in a research note. The bank forecasts Indian GDP growth of 6.3% for fiscal 2025 and 6.5% for 2026, citing improving economic indicators and support from fiscal and monetary policy. We will discuss the latter in detail in the second part of the video. It expects the economic expansion to be further supported by a recovery in exports. India's long-term economic fundamentals remain strong, thanks to population growth, a stable political environment, improving infrastructure, and a growing entrepreneurial class. These factors can secure India's position as a leading consumer market and increase the share of manufacturing in GDP. Look at China in recent years. It is a world power in exports. India has been a laggard for many years, but now it is waking up and revealing its potential. Relative earnings growth in India is turning positive even on conservative estimates. Stock valuations are now at their most attractive level in years, according to Morgan Stanley. Currently in the Indian market, it looks likely that cyclical stocks and mid- and small-cap companies will outperform larger defensive stocks. But this is expected to be the case in other markets as well. In the US, these smaller companies are represented by the Russell 2000 index, which contains 2,000 companies with capitalization below $10 billion. This is due to the fact that smaller companies have generally been pretty much forgotten in recent years, with investors much more likely to favor tech giants or glorified megacorporations. Smaller businesses have thus been in the shadows. But the coming years could be the most growthful for them in years. Key factors contributing to the current positive market sentiment in India include the recent turnaround in the Reserve Bank of India's policy, the government's growth-oriented budget, and the growing participation of domestic investors in the market. The growing number of subscribers to our channel also keeps us moving. So join in too and never miss another top video from the world of stock markets. India's low correlation with global markets and strong domestic investment base makes it an interesting choice for investors looking for something more stable in the current market turmoil. Indian authorities have shifted to more growth-oriented fiscal and monetary policies in recent months, which analysts say has set the world's fifth-largest economy up for potential performance growth. India is not siding with either the US or China in the escalating trade war and is thus well-positioned to benefit from the changing world order. Retail investor inflows into Indian equity mutual funds, which have more than doubled in the past 3 years, have remained strong since the beginning of the year, reaching nearly $3 billion a month. Though they have eased slightly from recent highs, India's benchmark BSE Sensex, which comprises 30 of India's largest companies, making it the equivalent to the US Dow Jones Index, has been relatively resilient in recent days given events in global markets. Since Trump's reciprocal tariffs were announced, the BSE index is now up 7.3% and is only 3% below its absolute peak. In contrast, Hong Kong's Hang Seng Index, for example, is down about 10% over the same period. The US stock markets are similar, and are also still posting significant losses. India is the clear winner here. The losses after the introduction of tariffs were completely erased yesterday, when the index managed to rise by 5.5%, while the US markets were falling. Even as foreign investors sold Indian stocks, taking 346 billion rupees $4 billion out of the market so far this month, domestic institutions remained buyers amid the turmoil. This helped limit, and eventually overcome, losses in local stock indices. The key to success will continue to be for investors to pick sectors that are least exposed to the uncertain global economy. Not just in the Indian market, these are banks, energy, telecom, or real estate. You can find out which stocks meet these conditions and are getting more and more interesting thanks to the current downturns in the fair price index on 𝗕𝗂𝗶𝗀, which shows you stocks that are below their fair price according to DFC and relative valuation. You can also filter by sector and lots of other terms, so check it out and pick stocks like a pro. On the other hand, stocks in sectors such as IT services were under pressure, where Indian major Tata Consultancy Services warned of the adverse impact of global shocks. Its shares have already fallen 21% since the start of this year, and are down 28% since the peak. And how is India's currency doing? The Indian rupee has seen its worst weekly decline in 2 months. It is thus on the same course as it was at the beginning of the year. This makes stocks or other assets cheaper for foreign investors. There is a new video coming out on Friday in which we look at a specific European stock that is currently well below its fair value, so be sure to subscribe so you don't miss out. Are you interested in the Indian or other markets outside of Europe and the US, or even have some Indian stocks in your portfolio? Share it in the comments. Good luck with your investments.